Very good morning, everyone. Hope you all must be doing great. Guys, am I audible to everybody?
Yes,
Yes,
sir.
sir.
Good, very nice. And the students who can come on camera, please do come on camera as well. Okay, so let us start with the practice session. I'll be starting with PGBP today. So for 1, 2, 3 days, we'll be doing PGBP. We'll be doing study material questions, study material illustrations, past year questions also, which has happened, which came in recent, at least last 6 attempts. RTPs, revisionary test paper, and mock tests, right? So for each chapter, we'll be completing all these things. So it will take approximately, for big chapters, it will take approximately 3 to 4 days to complete. For small chapters, it might complete in 1 or 2 days also. So this way we'll be able to revise all the things, that too with the practice sessions, that too with the writing sessions. In next 30-35 days, we'll be able to complete everything. And in fact, before that. So let us start with the PGBP chapter today. And I'm picking up the study material first. So if you will see, no need to open your study. If you have the study material right now with you, you can open it. It is page number 3.335. If you don't have it right now, that's completely fine. Look at the screen. It says, Mr. Abhimanyu is engaged in the business of generation and distribution of electric power. So whenever there is a business of electric generation of electric power, we get an idea that the assessee has an option. See, by default, he will get SLM method of charging depreciation, correct? And if he chooses the option, that is only the option can be selected only once in a lifetime, that too at the time of filing his first return when they have commenced the business. There they can charge WDV method also, right? So as of now, let us read the question. So Abhimanyu is engaged in the business of generation and distribution of power, and he opts to claim depreciation on written down value for income tax purposes. So they have clearly mentioned that he is claiming depreciation at WDV method. He is not opting SLM. So before I read further, let me see that what are we supposed to calculate. So here the question gets completed, I think. Okay. From the following details, compute the depreciation allowable as per the provision of the Income Tax Act 1961 for the assessment year 25-26. So simply we need to compute the depreciation as per WDV method, assuming he has exercised the option of shifting out of the default tax regime. Okay, so he shifted out from the default tax regime. Guys, we understand in PGBP there are three areas where there is a difference between default regime and optional regime. Can you name them? What are those? Please, everybody name them. Students.
Textile business.
Very nice. And the students who are watching on YouTube, please write it on comments. What are the three areas where there is a difference between optional and default regime? So Kaushik, you are saying one is specified business. Right?
Additional depreciation. Depreciation.
Specified business. Second is additional depreciation.
Scientific research.
And third is scientific research, section 35, but only one part, that is outside research, when you donate something. So outside research, this is section 35. Only in these three cases, Specified business 35 AD. Remember that 14 businesses? That 35 AD is only available under optional regime. Under default, we don't get it. Additional depreciation. See, additional depreciation is only under optional regime. But remember, additional depreciation is given to the assessee who are engaged in manufacturing business. Guys, this, whether a person who is having a business of generation of and distribution of electric power, can you also give additional depreciation to them if they follow optional regime? The answer is yes or no? Yes or no? Please tell me. You might be right, you might be wrong. Don't doesn't matter right now. We are doing this practice. So can we give,
manufacturing?
so it is given to only manufacturing operations, those who are carrying manufacturing business. So Bala, what do you think, that this assessee is carrying manufacturing or not?
Not. No, sir.
See, the generation word itself is saying that he is generating something, producing something. So when you are generating something, generating electric power also, so that is again under manufacturing operations, and you are entitled to, if you are following optional regime. And in SLM method, we don't give additional depreciation, but in WDV method, we give additional depreciation. So in this question, this is a classic example here that he is following optional regime. He is not following default. And he is also opting WDV method, right? And he's also a manufacturing. It will be considered as manufacturing business, generation of power. So additional depreciation would be there. Understood? Now tell me, how much is the additional depreciation? What is the rate?
20%.
20%. Can we purchase new furniture, new building, etc.? Can we claim additional depreciation on it? The answer is no. It is only on plant and machinery. So 20% is the, whatever is the cost of that machine, 20% of that. But if we have used it for less than 180 days, 10%. Okay. Now let us compute his depreciation. So it is given to us that the WDV of the block, as see, we have to compute the depreciation for the assessment year 25-26. That is previous year 24 and 25, this previous year, which is starting from 1st of April. It is starting from 1st of April 24, correct? So now just see that the WDV as on 31st March 2024 is 50 lakh, and depreciation for the previous year 23-24, last year depreciation is 7.5 lakh. Can you tell me what is the WDV as on, because we have to calculate for this previous year for starting from 1st April 24. Guys, just read these two lines, first and second, and tell me how much is the WDV as on 1/4/2024.
42.5.
Correct. We will not start with 50 because 50 was the last year closing. It was last year closing. Generally, last year closing becomes the next year opening. But the thing is that if they have specifically given that the last year depreciation is this, and they have given the value of the last year, so it means as on 1/4/2024, we have to first reduce the depreciation of the last year. So this would be 42.5. Very nice. Okay. New machinery purchased on 12th of October 2024, 10 lakh rupees. Please tell me this new machine purchased, right? And we will see that whether it is installed in factory or not. So if this person is a manufacturing business, and if the question is silent, that whether this machine is installed in factory or not, then you should assume here that this is installed in factory, because the person who is manufacturing business, 99%, if he is purchasing a machine, he might be installing in factory. So if the question is silent, then you can put an assumption over there that it is assumed that it is installed in factory. And also, why I am giving you this assumption, why we are so strong in assuming this, because they have used the word new. So if new machinery is purchased on this date, so we'll assume that this is installed in factory. Now, machinery imported from Colombo. So we have imported some machine from outside India. Okay, first of all, tell me on this, if you will give additional depreciation, it would be full or it would be half?
Half.
Yes. What is the criteria, guys? What is the parameter date? Which
3rd
October?
October.
4th October onwards. So 4th October onwards, it would be half, right? So it is after 4th of October because it would be less than 180 days. Now, fourth point, machinery imported from Colombo on this date. This machine has been used only in Colombo earlier and the assessee is the first user in India. Okay, we'll claim depreciation obviously. Normal depreciation will claim. Can we claim additional depreciation also on this machine?
No, sir.
No,
sir.
it is a second-hand machine. Even it is used first time in India, does not matter. It is a second-hand machine. Will not be calculating the additional depreciation. So we have to give this statement to the examiner. We have to actually tell him that why we are not charging additional depreciation, and we don't have to write two big notes, simple notes. We have to just intimate the examiner. Then fifth is new computer installed in generation wing on 15/7/24, 2 lakh. Okay. For all these things, these are machinery 15% rate. And you understand on computers, what is the rate of depreciation? Please let me know.
40%.
40%. Very nice.
Okay.
40% is the rate. So it is a different block altogether. So what was the opening value of this block? Nothing is mentioned. So opening value is 0. Additions during the year. This is the only addition. Now please tell me whether we are entitled to get additional depreciation on computer or not.
No, sir.
No, sir. Only for plant and machine.
Computer is building, Bala.
No, sir. We can claim.
It is a plant and machinery. It is the plant and machinery. And if any plant and machinery is installed in factory, see, they have clearly mentioned that, see, generally, I should assume computer should be generally used in office building, not in factory building. This is the general assumption regarding computers and other things, right? These things. But they have specifically given to you that this computer is installed in the generation wing. What is generation wing? Manufacturing unit. So if this, now tell me what is the condition of additional depreciation. It should be a manufacturing assessee. Yes, the assessee is manufacturing. This person should have purchased new plant and machinery. Yes, it is new, and computer is plant and machinery. It should be installed not in office but in the factory. So it is being installed in factory. All the conditions are getting satisfied. It should not be motor vehicles or other ships and aircraft. Otherwise, we are entitled to claim additional depreciation here. So got it, guys? So should we compute additional depreciation or we should not? We should compute. Correct? So we should compute. All assets were purchased by account paycheck. Guys, please tell me why they have given this statement. All assets are purchased by account paycheck.
The amount is not exceeding
Because
6,000 in cash.
Correct. Because if you purchase any asset in cash, and that too, you pay more than 10,000 in a single day. So that we don't consider as your capital expenditure. So on that value, we don't give you depreciation. So for example, let's say they would have told me that this guy has purchased a machine of 10 lakh. This machine he has purchased on this date, right? They would have told me that while purchasing this machine of 10 lakh, they have paid 2 lakh rupees in cash, right? 2 lakh rupees they have paid in cash. 8 lakh rupees, they are not saying anything. So we'll assume that 8 lakh he has paid through banking mode, account, paycheck, etc. But 2 lakh they have paid in cash. So we understand anything which is paid more than 10,000 in cash, we will not allow it. Right. So in that case, the value of this machinery will not be 10 lakh in that case, because 2 lakh, since it is more than 10,000, we will not take as it is paid in cash. So we will take only 8 lakh in that case. Got it, guys? Everybody, Arup, Shiva, Vignesh, everybody is okay with this?
Yes, sir.
Very good.
Yes, sir.
Very
Yes, sir.
good. Very good. So let us quickly do this question. Guys, generally, generally PGBP question, how PGBP question comes generally, normal as a full-fledged question of 15 marks. 15 marks is the total income question although, but majority it is PGBP. 60, 70, 80% it is PGBP only. And sometimes they give a separate question, a separate small questions also on PGBP like this, which is related to any particular thing. Any particular thing, it could be related to presumptive income, it could be related to depreciation, it could be related to one particular segment. It could be related to section 35 scientific research also. So sometimes they give you a specific small question of 4 marks or so. So if this question will come, it would be around 4 to 5 marks, not more than that. Okay. And this question, although I'm taking time to explain you, but this question should be done in not more than 7 to 8 minutes. Okay. So now we need to compute depreciation, and we understand there are two blocks. One is 15% and another is 40%. Everybody with me. Solution. Just give me a moment. Good morning. Okay. Now, computation of everybody try to do it yourself. Although you can take the help of the screen also, but I would request you, because now we are practicing now. So try to take this habit that now more than 70-80% of the question you should solve it yourself, because now you know what is PGBP, you know all the provisions now also. Now we have to practice, so try to solve it yourself. If you have this right now with you study material, so just keep it with you and try to solve it yourself. And also if you stuck somewhere, look at the screen as well. Computation of depreciation under section 32, and this is for assessment year 25-26, and he's following optional regime. So first we will compute on plant and machinery 15% block. So how we'll compute it? Opening WDV of the block, opening WDV means as on 1/4/2024. Opening WDV of the block was how much? 50 minus 7.5. So I will just show him that we are reducing it. 50 minus 7.5. So it would be 50 lakh minus 7.5 lakh. So this would be 42 lakh 50,000. And this is plant machinery 15% block. Add additions during the year. So we have purchased third and fourth. We have purchased, although one of them is entitled for additional depreciation also, but first of all, we'll calculate the normal depreciation. So this machine is purchased on 12/10/24. Machine on 12/10/2024 for rupees 10 lakh. And another machine from Colombo, this was purchased on 12/4/2024. 12/4/2024, full depreciation, not less than 180 days. And if they have not given the date of put to use, so we always assume that the purchase date and put to use date is the same. So 12/4/2024, how much it is for? 9 lakh. Anything is sold during the year? The answer is no. So we should not write it. We'll not waste our time in writing less money received on sale or disposal. So if nothing is getting sold, so don't worry about it. Now these are the 4 points we have done. 5th point is altogether a different block, so we'll not take it right now. So WDV at the end,
61 lakh 50,000, sir.
very good. For charging depreciation, Sumanyu, 61 lakh 50,000, right?
Yes, sir.
Okay. Now depreciation, you should ask it that whether it contains any additions during the year. The answer is yes. These two are the additions during the year. Okay. And the remaining is the balancing figure. So these two are the additions during the year. How much? 10 lakh also, 9 lakh also, and remaining balancing figure out of 16 1.5 lakh, just subtract these two, you will get 42.5 balancing figure. I'm not taking this. Coincidentally, it is coming the same, but actually you should always, don't make this mistake, you should always see that whatever is the additions during the year, first pick it up, and that whatever is the remaining, the balancing figure, on that amount you have to compute the depreciation. So depreciation should be computed here. Students make a mistake that they compute here also, right? So here the new asset is purchase of 10 lakh also, 9 lakh also. First give normal depreciation, and since it is put to use, if nothing is mentioned, so we always assume that it is used for on the same date. So this 10 lakh is for less than 180 days, this 9 lakh is for full depreciation. So on 10 lakh, we'll claim half. On 9 lakh, we'll claim full. And on the remaining comes to 42.5, we'll claim full. So what you can do is, now instead of writing, because on this 42.5 it is full, on this 9 lakh it is full. So I can say that on 51.5 lakh it is full. Agree? And on 10 lakh, it would be half. Everybody okay with this? So I'm doing it directly, and this is how you should do. So depreciation under section 32 on rupees 10 lakh at rate of 7.5% and on rupees 51.5 lakh at rate of 15%. This is the normal depreciation.
75,000 and 7 lakh 72,500, sir.
Correct, so Manu, 75,000, and this would be, you are saying 51.
1 lakh
7 lakh
72,000.
72,500.
Correct, 7,72,500. Total comes to,
8 lakh 47,500.
very good, 8,47,500. This is what? This is the normal depreciation on this asset. This is the normal depreciation. And now we will charge the additional depreciation also. So now additional depreciation. Additional depreciation. Why we are giving additional depreciation? As assessee is generating power. Right? And in optional regime we give it. So additional depreciation. And how much it would be on rupees 10 lakh machinery?
20%.
20% into half. Got it? Why? Because it is used for less than 180 days. That is 10%. So it would be 1 lakh rupees. And on machine from Colombo, so it will not claim additional depreciation as it is a second-hand machine. So we'll just intimate to the examiner that why we have not computed it. So this is the depreciation. You don't have to, now you don't have to calculate that what is the, unless and until they are asking that what is the WDV for next year. So if they are not asking, so we'll not compute it. So they are more interested in depreciation. So now our depreciation is this and this. Got it? So my depreciation is this and this. So in that case, we can say depreciation on plant and machinery, 15% block comes to 9,47,500. So this is the one depreciation. You can also show it like this in the examination if you want to highlight something. And now I believe everybody is doing it with me. Have you done
Yes,
this
sir.
till here?
Yes, sir.
Very good. Now we have second, see it was first, we named it first plant machinery 15%. So now second would be plant and machinery 40%. This is for computers. So opening WDV, so now we have only just, so instead of writing the entire format, so we have to see, we have limited time guys, and we have to manage in that time. So instead of writing it opening WDV, list additions during the year, money received on sale, now just imagine, just see that only this information is given regarding the computer. Only this information we have. Opening we don't have, any sale we don't have, only the additions we have, and this new computer is installed in the generation wing. on 15/7/24. 15/7/24 means full depreciation, obviously. We have a parameter 4th October onwards, right? So it is before that, it is more than 180 days. So on 2 lakh, you will claim half depreciation or full? First normal. Half or full?
Full.
Full. 40%. 40% full. And then additional depreciation also. How much additional depreciation, guys?
20%.
20%. So 40% on this 2 lakh and 20% on this 2 lakh. So we'll not spend more than a minute to write it. So you have to be very, very smart, and this thing will come with practice. So that is the reason we are doing these practice sessions, that how you will be able to manage the time. So on computers, purchased and put to use on 15/7/24. So normal depreciation would be 40% of 2 lakh, 80, and additional depreciation also. As why you are claiming additional depreciation, write it. Just tell him that why you are taking additional depreciation, as installed in generation wing. As you have installed in the generation wing, so that is the reason you are claiming additional depreciation, 20% of 2 lakh. So this is 40. So the total depreciation comes to, on computers, 120. Correct? This is the computer depreciation. Now the depreciation in total. So therefore, total depreciation under section 32.
10,67,000.
Correct. So 9,47,500, the earlier one, this one, plus 1,20,000. So very nice, Manu. 10,67,500. Everybody, let me know once you are done. Give me a moment.
Yes, sir.
Okay. Okay. Now, okay, some comments from YouTube. Vishnu, is this a demo class? No, this is not a demo class. Actually, it's a practice session. Okay. Let us come to a good question. Okay. Guys, this is on page number 3.337. 3.337. Question number 7. Mr. Shivam, a retail trader of Cochin. Here's my screen is visible to everybody. Can you read it?
Yes, sir.
Okay.
Yes, sir.
Okay. Shivam, a retail trader of Cochin. He's a retail trader. Okay. So first of all, now please just give this thing that whether he is a manufacturer or he's a retailer. So he's not a manufacturer. So we don't have to bother about additional depreciation also. So he's a retail trader of Cochin, giving the following trading and profit and loss account for the year ending 31st March 2025. And a trading and profit and loss account is given to you. And so this type of question, you should always see that what is asked from you. So it is, I would not say it's a total income question, but because mostly it is PGBP only. So this is a miniature of total income question. It is the miniature of that 15 marks question, which we get in the first thing in the examination. So it is just a miniature of it. You are required to compute the PGBP, the profits and gains of Mr. Shivam under presumptive taxation 4480. Okay. Presumptive taxation under 4480. Guys, please tell me, everybody tell me what is the presumptive taxation amount? How much is the income we take under 44 AD? Everybody please tell me here, and students on YouTube, please write it on the comment. How much income we take in 44 AD under presumptive? Oh, tell me.
So
Lalu.
0 to 1 crore.
0 to, no, I'm not asking about the eligibility. About eligibility, I'm not asking about the eligibility. How much is the amount of PGBP? How much presumptive PGBP we take? Try to remember. I understand that, guys, there are so many things now we tend to forget. It's completely fine. So that is the reason we are practicing now. Anybody?
8% of turnover. Or 6% of turnover.
Okay, good, very nice.
8% of turnover if it is received fully in bank. 6% of turnover if it is something received
Correct,
in
correct, Bala. See, how much is the PGBP income under 44 AD? So it is 8% of the turnover also, or 6% of the turnover also, right? Either 8% of the turnover or 6% of the turnover. So what it is, let's say for example, our turnover is, for example, somebody's turnover is 90 lakh rupees. So somebody's turnover is 90 lakh rupees. So let's say he's saying that my sales is 90 lakh, and out of this 90 lakh, I have received 10 lakh rupees in cash, and I have received 80 lakh rupees through my banking mode, through account paycheck, through UPI, through net banking, etc. So it is through banking mode. So there is a client who comes to us, a client who is coming to us, and he's saying that my sales is 990 lakh rupees, and this is my bifurcation. So we will say, okay, sir, we'll give you 44 AD, but on this cash, the cash sales which you have made, it would be 8%. We'll presume that 8% is your presumptive PGBP income. So 8% of 10 lakh, we'll say 80,000 rupees is your PGBP from here, and here it would be 6%. So 80 lakh into 6%. 80 lakh into 6% is how much? 480. So 480 here, 80,000 here. So total it would be how much? 540. So this is your presumptive income. Understood, everybody? So it is 8% also, 6% also. And please remember, although that is not very important, but still, because now the examiner is asking you this time, if you look at the paper of last attempt or last to last attempt also, they are asking you very conceptual questions, And one of them is, guys, you will apply 6% on this banking mode, which you have received up to the due date of ROI. Let's say, for example, and now since they are asking very conceptual thing, let's say they might give you like this, that the assessee's turnover is 90 lakh. Entirely, he got it through banking mode. Entirely, it was through banking mode. Okay. But out of this, 80 lakh banking mode, through banking mode, he received up to the due date of ROI. And remaining 10 lakh, although he received through banking mode, through account pay, etc., but after the due date of ROI. Understood? So he made a sales, but 10 lakh, he received it through banking mode, but after the due date of ROI. So some students might feel that it is received through banking mode. Let us apply 6% on the entire 90 lakh. No. In this case, again, through banking mode, which you have received up to the due date of ROI, here it would be 6%. And anything which you have received in cash or anything after the due date, it would be 8% only. Are you all okay with this as well?
Yes, sir.
Yes, sir.
Okay. So let us see that how his turnover he is getting. So this client is coming to us and he's telling us, so I'm reading it once again. You are required to compute the profits and gains of Mr. Shivam under presumptive taxation this, and profits and gains as per the regular provision of the act. What is regular provision? Normal provisions. So they are asking us both. First calculate through presumptive income also, and also calculate it normally also. Normally, that means that we will give all these expenses and all as a deduction normally. Assuming he has exercised the option of shifting out of the default tax regime under 115 BAC. Again, optional regime he is taking, not default. Okay. Assume that whole of the amount of turnover received by account pay check or use of electronic clearing system through banking account during the previous year. So during the previous year only he has received this. How he has received it? Or everything through banking mode. Now please tell me, whatever is his turnover, how much you will take? 8% or 6%?
6%.
6%. And who is eligible, guys? Who is eligible? Whose turnover is up till? Whose turnover is from 0 till
0 to
2 crores? This person is eligible in 44 AD. Right? This person is eligible to take this presumptive taxation scheme if your turnover is not more than 2 crores. However, there is one more point. So generally the people are eligible if your turnover is up till 2 crores. So let us see that what is his turnover. Although there is one more point, I'll come back. So how you will see his turnover? From his profit and loss account, from trading and profit and loss account. How much is the turnover? 1 crore 12 lakh 11,500. Guys, what do you think? He is eligible or not eligible?
Yes, sir.
eligible.
Yes, sir.
Eligible. But tell me, if his sales would have been 2 crore 12 lakh 11,500,
We will check additional condition.
is he eligible? The answer is yes, still eligible. Why? Because this is again important. Generally, we see from if your turnover is between 0 to 2 crores, then you are eligible. But for some SSC who are maintaining transparent account, what does it mean? Don't use this word transparent accounts in your examination. It means that if your gross receipts are mainly from through banking mode, whatever you receive is through banking mode, and how much? Maximum 95%. 95% you are receiving through banking mode, then you are eligible even if your turnover is going up till 3 crores.
3 crores.
Right? So here, this blue line, this blue thing which I have created over here, it is only for those people who receive their total, out of their total turnover, not more than 5% is through cash. From cash, it should be not more than 5%. In other words, I can say from banking mode, it is 95%, then you are eligible. Okay. Guys, what do you think? Although he is eligible here as well, his turnover in our question is, it is 1 crore something. So he's eligible anyways. But this guy, because he is receiving everything through account paycheck, 100% of the money which he is receiving is through account paycheck. Even we need just 95%. We need at least 95% so that we can give him the 3 crore limit also. So his entire amount which he is receiving is through banking mode. So here we have no problem. But if anybody whose turnover is more than 3 crores, no, simply not eligible. If he will say that, sir, my entire turnover is, I'm receiving through account paycheck, demand draft, etc., but my turnover is more than 3 crores. No, boss, 44 AD is not eligible. Normal. Please calculate your income normally, not through presumptive income. Okay. So we understood what we need to calculate, guys. Please tell me what we need to calculate, everybody. 2 things. His PGBP income from presumptive and his PGBP income from normal provisions. Guys, this is just a 1 minute job, not even 1 minute. It is just 10 seconds job, 4480. This would be done, I believe. I think you can easily calculate how much this amount into 6%. Done. This amount into 6% done. Right? The second,
690.
right. Correct, Sumani. Now, the second is that, and for this 4480, we don't need any additional information. For this 4480, we don't need anything. We just need your turnover. That's it. We just need your turnover. See, think it practically. When a client will come to you, he's saying, sir, my turnover is this. My turnover is this, and I follow 4480 provisions. So I will not even ask that what are your expenses, what are your depreciation. I'll not even ask how much you have paid in cash, how much you have paid to related party. I will not even ask him. I'll just ask that what is your turnover? 6% or 8%, that's it. My job is done. But if we have to follow as per normal, then we have to see everything. So let us see everything now. Now I am discussing about the normal provisions, right? Normal full-fledged provisions. Now it is given to us that the trading and profit and loss account for the year ending is this one. His trading You understand, in accounting, we have trading account first, where we keep our direct expenses, direct income, and then we have profit and loss account. But guys, in income tax, it does not matter. We'll just actually consider it as one P&L account. So what you need to do is, see, trading account, here it is actually ending, and after that, profit and loss account is commencing. So this is just the total. This 1, 13, 97, 600 is just a total. Here also, here also. So what I need to do is, I should not consider this. So I can cut this. Right? Second thing, we understand the balance of trading and profit and loss account goes here. So here there is a debit, gross profit, 3,03,600. And it is going here, 3,03,600. We don't need this also. We will just consider it as a one single account. In income tax, in accountancy, we understand there is a difference, but in income tax, it is same for us. So whether it is direct expenses, indirect expenses, does not matter. We just see, we have only the criteria. Any expenses which are from section 30 till 37, they are allowed. Got it? So we don't need this also. 3,03,600, we don't need this also. Everybody got it?
Yes,
Everybody
sir.
understood? Students who are watching on YouTube, you got it? Give me a moment, guys. Okay. Now, guys, every day we'll have a class for 1 hour, right? So we can revise everything. And this is the only way you can revise income tax. This is the only way you can revise income tax. Not through. I don't want that you should open your books again and reading all the provisions. No. See, when you will be reading all the provisions, you will end up wasting so many days in reading just one chapter, PGBB itself, let's say. But if you will do the questions, you will get to know that, yes, you will be able to apply those provisions. So it is only, this is the best way to revise your taxation. Okay. So let us see what are there in the debit side. Opening stock. Everybody tell me, are we all okay with the opening stock expense? It's a normal
Yes.
business.
Yes,
Okay.
sir.
Purchases, we are okay.
Yes, sir.
I have not read the information so far. I'm just seeing my profit and loss account. Gross profit, we don't need it. Salary. Everybody agree that we are okay with salary?
Yes,
Yes,
sir.
sir.
Can you tell me under which section it is allowed? Although you don't have to tell the
37.
examiner, but everybody tell me here and on YouTube, everybody tell me under which section? 37. Rent and rates. Are you all okay with this expense? Correct.
Yes.
Normally we are okay with it. So if it is rent and rates of building, it could be section 30. But as of now, don't worry about the section. Even you don't have to quote the section number. And most of the sections number you don't have to quote. So rent and rates, we are okay with it. Interest on loan. What do you think, guys? As of now, let's say no information is given in your information. Let's say regarding interest on loan, no information is given. So what you will say? Interest on loan is allowed or not allowed?
Allowed.
It is allowed. See, if
Allowed,
no
sir.
information is given, we will assume that this loan is taken for our business purpose, profession purpose. So interest is allowed. So interest on loan is allowed. Specifically, if you will ask me, although you don't have to write it anywhere, but yes, section 36 allows interest on borrowings. So this is allowed. Okay. Tell me about this depreciation. If nothing is mentioned in the information, let's say this is the only thing which is mentioned in the question, what you will do? You will allow
Allow.
it or you will disallow it?
Allow.
Allowed.
Very good. If nothing is mentioned, then we will allow it. If nothing is mentioned, we will allow it. But in case it is mentioned in the information that depreciation under section 32 is something else, so we will not allow this, we will allow that, right? So we'll add back this and we will allow that. You can do the difference also. Or it might be the case that in the information it has been given that they will not give you directly that this is the depreciation under section 32. They might give you the figures. Opening value is this, additions during the year is this, money received on sale is this. So then we have to calculate the depreciation also. So it depends upon the information, how the information is provided to us. Printing and stationery. Guys, what do you think? Allowed or not allowed?
Allowed.
Allow.
Postage and telegram.
Allow.
And you
No.
understand most of the expenses are covered under which section? 37.
37.
Okay. Read this and tell me. Everybody. Everybody.
Not allowed, sir.
Not allowed.
Capital
Loss
gain.
on sale of shares, short term. It is
Short-term
actually,
capital.
it's a loss of some other head. So it is not a business expense. It is not a business loss. So it should go in capital gain. So we should not take it here. It will go in capital gain. Right? It will go in capital gain. Guys, now please just revise your set of thing also. It's a loss now. Now please tell me capital losses under the capital gain, losses, capital losses. Can we set it off from other heads or we can't set it off?
Only from capital gain.
We can't
Only
take
from
capital
capital
gain.
gain. You did. Do you remember what I used to tell
Ego.
about the capital gain?
Big
Capital
brother.
gain.
Ego.
Big brother, big ego.
Capital gain is an egoistic person. He's an egoistic person, so they don't take help from anybody. They give help, but they don't take help. So capital gain should be set off only from capital gain. And what about short term? Can it be set off from long term also, short term also?
Yes, sir.
Yes.
It's a small brother. So small brother can take the help of long term also, short term gain also. But if this would have been a long term loss, then only long term.
Not
Long
set
But
off.
as of now, we don't need it because right now we are more concerned with PGBP. The question is asking about PGBP income. So we'll simply disallow this, that this is not a business expense. Other general expenses. Guys, what do you think? If nothing is mentioned, what do you think? Allowed or not allowed?
Allowed.
Allowed. Normal
Allowed.
business expense.
Allowed.
So these are the expenses. Let us see our income side. Let us see our income side. Sales, we are okay. Closing stock, we are okay. It's the same way. Gross profit, we don't have to take. Income from UTI. UTI is Unit Trust of
Not
India.
allowed.
It is,
Not allowed.
Yes.
it is a
IFO.
PGBP income or an IFOS income.
IFOS.
It is an
IFOS.
IFOS income. So it is an IFOS income. Income from UTI, income from any mutual funds, income of dividend income. It is all IFOS. Okay. Some of the students, if you remember the chapter of deductions, and the students who have not yet done, they will actually, I'll tell you there. Let's say if this would have been by interest on PPF, Public Provident Fund. Let's say this would have been not
ATC.
UTI. Interest on PPF. It is obviously it is not PGBP. It is not PGBP. So we'll while computing PGBP, we'll cut it. We'll subtract it. But will you take it in IFOS? Take it, but show it exempt. PPF. Remember PPF, Public Provident Fund. The students, most of you have done deductions. Some students have not yet done. That's okay. Arup, Shiva, in deductions, I'll tell you that PPF interest. Vignesh getting it. Mathumita, Raghavi, Kishore, everybody.
Yes, sir.
So interest
Yes,
from
sir.
PPF, please remember, write somewhere. Just don't listen to me. Unless and until you will write now, you will not get to know. So it is an exempt income. It is an exempt. PPF is exempt, guys. Write it somewhere. Okay, but we don't require it here. Okay, this is the income side only. Let us read the information side. It was found that some stocks were omitted to be included in the both opening and closing stock. Okay. So some stock was omitted, were omitted. We have not recorded them. So let us record them. Okay. Opening stock 9,000. Let us record 9,000. Please tell me if I'll record 9,000, where I will record, debit side or credit side? This is my P&L account.
Debit side.
Please tell me if I'll record it, because we have not recorded it. They were omitted. If we'll record it. So 9,000 opening stock, I will record it over here. Debit side. Please tell me what impact it will make to my profit.
Reduce.
Reduce the profit.
Since I'm writing, I'm increasing my debit side. I'm increasing my expenses side. I'm increasing my expenses side. So it means my profit will be reduced. So I have to subtract less. Don't learn it. Don't learn it. Apply your brains. Apply your logic. It's very simple. So opening stock, if you are recording now, you are increasing your expenses. When you are increasing your expenses, your profit will go down. So it will be subtracted less. Okay. Now closing stock. It was omitted. Now go and record it. 18,000. Go and record it 18,000. So I'll record
Increase it.
18,000 here. So if I'll record 18,000 here, please tell me what impact it will make. On my
Profit.
Increase the profit.
Correct. My income is increasing, my profit will increase. So it will be added. Any doubt here? Very good, Arup.
Sir.
Any doubt here? No. Okay. YouTube students, any doubt? Please let me know. Just give me a moment, guys. Okay. Second point. Salary includes 10,000. Salary includes 10,000. Let us see how much was the salary. His salary 60,000. And the information is only related to 10,000. So what about that 50,000? 50,000 is okay. So don't care about that 50. See, they are giving us an information. Salary includes 10,000 rupees paid to his brother. Brother is what? Related party, which is unreasonable to the extent of 2,000. Which is unreasonable to the extent of 2,000. Guys, what you will do over here? Everybody tell me what you will do.
Disallow 2,000.
We are paying to a related party. Are we paying at the fair market value or we are paying more?
More.
More.
Paying more.
How much excess we are paying?
2,000.
2,000.
2,000.
So you will disallow this 2,000. You will disallow this 2,000 rupees,
And
right? And payment to related party. If you remember the section, if you don't remember, that's okay. If you don't remember the section number, but you should know the provision. It is under section 40. Which one? Anybody? Anybody from YouTube? Anybody from here?
48 to
38.
40 capital.
30
40 capital.
38 is proportionate expense, Vignesh. It is 48 to
48 to sir.
very good, very good, very good, Vignesh. So it is 48.2. 48.2 is payment to related party in excess. 48.3 is cash payment. Otherwise, no need to. If you don't remember the section, please don't quote it there. And it's not required. Your marks will not be deducted. Don't worry about your numbers. Your marks will not be deducted, right? But still, you will understand it better if you have this. Okay. So salary includes 10,000 paid to his brother, which is unreasonable to the extent of 2,000. Okay. Guys, if this would have been paid to his brother-in-law, what you would have done? If it is not brother but brother-in-law.
Allowed, sir.
So 48.2 says that if you are making a payment to the related party, and for individual who is the related party, in his spouse, very, very specific, guys, very, very specific. For 48.2, the 48.2, the related definition is very narrow. It's very, very small definition. Spouse is related party. Children are related party. Brother and sister is related party. Linear ascendant and descendant are only. Linear ascendant means parents, grandparents, children, grandchildren. That's it, full stop. Period. These are the only related party. If you are making a payment to somebody else, you are making a payment to your uncle, you are making a payment to Chikkappa, you are making a payment to your cousin, you are making a payment to your father-in-law, mother-in-law, brother-in-law, sister-in-law, no related party. If they are no related party, 48.2 will not come. If 48.2 will not come, then we are okay with this. Even if we have made in excess, we are perfectly okay with it. Please do not disallow this. Then please perfectly allow it. Have you understood it what I am saying or no? Everybody tell me yes or no.
understood, sir.
Yes, sir.
Yes, sir.
Very good. Very good. And the students who are watching live, please like this video. Please do like this video so that it can be shared with others as well. Okay. Third, the whole amount of printing and stationery. Printing and stationery was what? 23,200. 23,200. The whole amount of printing and stationery was paid in cash by way of one-time payment to Ramesh. Tell me what you will do.
Disallow it, sir.
You will
Disallow.
disallow. You will disallow. Okay, please tell me if this would have been just 3,200
Allow.
Allow.
and they are saying that the whole of the amount is paid in cash, and some students will say, oh, the whole amount is paid. Let us disallow it. No. See, if it is not more than 10,000, then we are okay with it. Up till 10,000, we are okay with it. So in that case, it would have been allowed. But since it is more than 10,000, so we will disallow it fully. Okay, please tell me, should you disallow 13,200 or you should disallow fully?
Fully, sir.
Fully.
sir.
See, in 48.2 payment to related party, only excess is disallowed. But 48.3, entire amount is disallowed. So entire this would be disallowed. Okay. Now, fourth point. The depreciation provided in the profit and loss account was 1,05,000. Okay. The depreciation as per penal account we have seen, it was 1,05,000. Okay. But it was based on the following information. Now, guys, they have given the information. If they have given this information, it means that they want us to calculate the depreciation. So if the depreciation by our calculation is something different, it is different from 105, then we will not allow that 105, we will allow our depreciation. I believe you are okay with this. So this is opening balance of plant and machinery as on 31/3/24 minus depreciation of 23/24. 23/24 means last year. It means this is the opening balance. This is the opening balance. See how it is written. Opening balance of plant and machinery. That is written down value as on 31st March 24. The same which we have done in last question. Minus depreciation, we have done that. They have said that after reducing the depreciation of last year, now the opening is 420. We are good to go with 420. So what is the opening WDV of the block? 420. A new plant falling under the same block, a new plant falling under the same block of depreciation was bought on this date, 70,000 rupees. Please tell me he's following default. No, he's following optional regime. Will you give him additional depreciation?
Yes.
No.
Will you give him additional depreciation? I told you, na?
No, sir.
Sir, he is a trader. He is not a
He's
manufacturer.
a retailer. He's a retail trader, right? So he's not a manufacturer. You should not give him additional depreciation. Okay. 2 plants were sold also. So he purchased 1 plant on, okay, tell me he purchased on 1/7/2024. Half depreciation, full depreciation.
Full.
Full depreciation.
You understand 4th
Full
of October.
depreciation.
4th of October is the parameter. After 4th of October, you will count. If it would be less than 180 days. So it is before that. So it is more than 180 days, full depreciation. And 2 plants were sold for 50,000 rupees. Okay. So it means that we have to compute the depreciation here. Okay. Rent and rates includes GST liability of 3,400. Rent and rates. Rent and rates. Rates are taxes. So it also includes GST liability. First of all, tell me GST is allowed.
Sir.
Tell me, everybody,
Yes, sir.
everybody write in comments as
GST
well.
allowed.
YouTube students write in comments. Is it allowed or not? Yes.
Yes, sir.
GST is allowed. Any other sales tax, VAT, etc. All taxes are allowed. Except which tax is not allowed?
Income tax.
Income
tax.
Income tax.
Income tax, provision for income tax, interest on income tax. No, we will not allow that. GST liability is allowed. GST is allowed. So it includes GST also. We are okay with it. It should be allowed. But tell me, what do you know about taxes? Our taxes are allowed, okay. But if they are not paid, whether they are allowed or they are not allowed. So you understand there is a section 43B, a very, very important section 43B. What does 43B consist of? 7 expenses. These 7 expenses are allowed only on actual payment. Actual payment means if they are paid up to the due date of ROI. Understood? So everybody, are you able to recall 43B?
Yes, sir.
Yes, sir.
Everybody, these are 7 expenses in 43B. What are those 7? Any type of taxes.
Tax payable to government.
Tax payable to
Bonus
government,
or
any type of
commission.
taxes. First,
Bon-
second,
bonus
bonus
or
or commission
Bonus
to
or commission.
employees. Right? Third,
Interest on-
His salary are leaving cash.
interest from bank or financial institutions. Right?
Employees contribution.
Employer
Employee
contribution
contribution.
to provident fund or other welfare funds.
Leave
Next,
salary.
leave salary,
are leave
payment
and
to
cash.
railways. Right? Payment to railways. These are the 6. And for
Payment
MSME,
to MSME.
Amount payable to
MSME, we have a special provision. Understood? So these are the 7
Yes,
expenses where you should actually see that whether we have paid it or not. So it contains a GST liability, although GST liability is allowed, but let us see when it is paid. Okay, tell me, this is year ending 31st March 25. This is year ending 31st March 25. What would have been his due date? What do you think? What would have been his due
31st
date?
July. 31st 31st July. 31st July.
Okay.
2026.
31st July. See, I'm not only discussing this question, I'm discussing some other related sections also. I'm discussing my entire PGBP here. 31st July 2025 is the due date. Okay. This is the due date. And generally, guys, the person who is liable for audit, tell me the due
30th
date,
October.
when he's liable for audit. So we have a section. Can you tell me the section number? Don't worry, if you don't remember the section number in examination, don't worry about it. But it is 44AB.
Yeah.
Double A is maintenance of accounts, AB is tax audit. Okay, 44AB. What does it tells us? When for a profession, it tells us that if a profession turnover is more than 50 lakh, they are required to get their accounts audited. But for business, if the turnover is more than 1 crore, if the turnover is more than 1 crore, then you are required to get your accounts audited. Everybody okay with this?
Yes, sir.
So if you are required to get your accounts audited, then it would become 31st of October. It's not 31st July, it becomes 31st October. Please tell me whether his turnover is more than 1 crore or not.
Yes, sir.
More than 1 crore.
It's more than 1 crore. So tell me what would be his due date? Guys,
31st
for this question, it is not
31st
relevant.
October.
I'm telling you for this question, it is not relevant, but let us revise our audit section also, na? So tell me what is his due date? 31st July or 31st October?
31st October.
31st October.
Because he is required to get his accounts audited, but still you are not able to recall your entire section 44AB. Let me recall that section 44AB. 44AB was saying that generally your turnover is more than 1 crore, you are required to get your accounts audited. But if your cash receipts or cash payments, both cash receipts or cash payments, both are not more than 5% of your total receipts and cash payments not more than 5% of your total payments. Are you all getting it? Now tell me what is the limit for that. Now I have almost taught you that section. Now please tell me what is the limit for that. 10 crores. If your all the receipts during the year, out of the total receipts, your cash receipts are not more than 5%. Out of your total payments, your cash payment are not more than 5%. Then you are such a good assessee, such a transparent assessee. We are trusting you. You don't need an auditor. We are trusting you, and you can get a turnover up to 10 crore also. No audit required. If no audit required, 31st July. Now please tell me, although it's not relevant for this question, I'm revising that section also to you. Please tell me in this case, what would be his due date? We have read something.
31st July.
31st July.
July, sir.
31st July, why?
No audit required.
No audit required.
Okay, no audit
Turnover
required.
is less than
How
10
do you know
crore.
this? No audit required?
Because
Because turnover is less than 10 crore and he is received and paid all the cash.
Okay.
Bank.
Guys, you only know about this, na? Cash receipts. You only know, the question says that his turnover, entire turnover is received in banking mode. You know only about this, but you don't know about this. That how much payments he has made and how much payment was through, because he has made he might have made multiple payments. So you don't know this also, na? So we can't say, as of now, we can't say it would be 31st July or 31st October as the case may be. Right now, I can't say. Right? Because to tell them that whether you can take 31st July, no audit or audit, I need both the information. This information is not given to me. I have been given the information of receipts. So, okay. But this information is not given to me. Are you all understanding this also?
Yes, sir.
So the
Yes,
information is incomplete over here. That's okay. But this is not relevant in this question. So it's not relevant in this question. But I've just made you revise that section as well. Okay, let us come back. So let me take his due date 31st July also. Let it be. Now, he has some GST paid. Let us see when he has paid this GST. Rent and rates include GST liability of 3,400 paid on 7/4/25. Paid on 7/4/25. Guys, will you disallow this 3,400 or you will allow?
Allow.
See, whether his due date, we are not concerned is here. Whether his due date is 31st July 25 or his due date is 31st October 25, does not matter. Why? He has paid before that. He has paid before his due date. Whether it is 31st July for him, whether it is 31st October for him, does not matter here. Why? And I'm telling you, examiner will give you such date only. Don't worry about it. He will not give you complex date. So we have paid it before the due date. So what you have to do it over here? Should you disallow anything or this is completely fine?
Fine.
Arup,
Completely
you are
fine.
getting it? Arup Kishore, Shiva, Siddharth Smriti. So we are completely
sir.
fine with this. We are completely fine with this. Guys, some student, this is one area where some students can make a mistake. This is one area when some students can make a mistake. Please don't make a mistake over here. Right? So this is perfectly allowed. So will you do anything in computation or you will ignore it? You will ignore it. But please don't completely ignore it. Write a note over there that since it is paid before the due date of ROI, so it is allowed. Okay. Other general expenses includes 2,000 paid as donation to public charitable trust. Guys, other general expenses. These are the general expenses. 7060. It includes 2,000 rupees. It is paid as a donation to public charitable trust. Allowed or not allowed? Everybody, students on YouTube, please tell me. Allowed or not allowed?
We should
Arre, tell
disallow it as
me.
an expense and show it under deduction.
First of all, tell me whether it is a business. Everybody, YouTube students, Lakshmi, Vijay Srinivas, Himacha, tell me. Okay, please tell me first of all, is it a business expense?
No.
No,
sir.
it is not a business expense. It is not a business expense. 2,000 rupees paid as donation. It's a donation to a charitable trust. To some NGO, we have paid it. Right? To some NGO, we have paid it. It is not a business expense. Please, out of this, 2,000 shall be disallowed. Understood? 2,000 shall be disallowed. So, from PGBP, although we have to compute just PGBP over here, so we will be disallowing it over here. But the students who have done deductions also, we understand that it could be allowed in 80G. So it could be allowed in Abhirami, correct? It will be allowed in 80G. So the students who will do deductions, they will get to know. So 80G, it will assume that it is approved. It's a public charitable trust. So they have given a public charitable trust. So we'll assume that it is an approved institution and we are allowing it. And how much you will allow it, guys? Please tell me.
50% of the amount.
50% of the
or
qualifying.
50%
Correct.
of
The fourth
remaining
box. It is 100% allowed, 50% allowed. It is 50% allowed, subject to the qualifying limit also. So that you will get to know in 80G. Understood? So this was a question. Okay, let me quickly compute the depreciation, guys. Let me quickly compute the depreciation. How will compute the depreciation? So the opening value, opening WDV is how much? Opening WDV is
20,000.
4,20,000. Oh, my iPad got stuck. Okay. 4,20,000. And new plant machinery was bought for 70,000. And 2 plants were sold for 50,000. Okay. So simply, opening WDV 420, additions during the year 70, minus money received on sale 50,000. So 420 plus 70 minus 50, how much? 440. This is WDV
Yes,
at the end for charging depreciation. Okay. So what you will ask, whether it contains any new asset? Yes, new asset it is 70,000. And half depreciation, full depreciation, full.
Full depreciation.
So on entire this, so in 70,000 full depreciation, on remaining figure full depreciation, right? On remaining figure full depreciation. Guys, please don't make a mistake to calculate. Some students will make a mistake that they will calculate depreciation on 420. No. Please don't make that mistake. You have what it is. Opening WDV less money received on sale or disposal. Money received on sale or disposal. Or less. Sorry, this is addition during the year.
Additional question.
This was addition during the year. This was additions during the year. 70 minus money received on sale or disposal 50, 420. What it is? This is WDV at the end for charging depreciation. You have to compute depreciation on this. I don't know why when I check test paper, most of the students, I don't know why they compute depreciation on 70,000 also. And they compute on 420 also. 490, on 490 they compute depreciation. I don't know why. Guys, this is what it is. See, the name itself says WDV at the end for charging depreciation. So you have to compute depreciation only on this amount, 440. How much? Now we will ask from yourself whether it contains any asset which is added during the year. Yes, it contains 70,000. Why? 50,000 was the old machines which we have sold. So 70,000 we have. And now please ask whether it is used for more than 180 days or less than 180 days. So here it is more than 180 days. So full depreciation here. And on the remaining, what is the remaining? I believe 3 lakh, how much? 3 lakh 70,
70,000.
380,
Yes, sir. So 3 lakhs.
370 full depreciation here. So on 70 full, 370 full. That means I can say on 440 full depreciation. So what is the depreciation on 440?
66,000.
15% plant machinery, 15% is the general rate. So they have not mentioned 15%, sir. You can ask me, sir, they have not mentioned 15% anywhere. We understand the general rate on plant machinery is 15% only. So how much it would be? 66,000.
66,000.
Correct. So this is the depreciation. So 1,05,000 which they have charged, 1,05,000 which they have charged, we will cut it. No, it is not correct. And we will allow only 66,000. You can do the difference also, right? The excess depreciation which they have claimed, you can disallow that also. So it is as per your wish. That is pure mathematics. Okay, guys, will you be able to do this question?
Yes, sir.
So I am giving you an homework today that please do this question. So we have discussed everything. Everybody now, it should not take right now only. Don't think that you will do it later. Right now only, after this class, sit for 10 minutes. Sit for 10. We have discussed it entirely. Set your watch. Set a stopwatch. 10 minutes. This is how you should do it now. 10 minutes and do it right now. Right now, I'm stopping the class, but right now, you have to do this question. Got it? Guys, classes will be on all days. Classes would be on all days except Sundays. So on Sundays, class will not be there. So I believe tomorrow is Sunday. So now we'll meet on Monday. On Monday, we'll meet. So on Monday onwards, we have a class. Correct? Okay.
Yes.
Bye-bye. Take care. See you on Monday morning.
Thank you.